Jade Stapleton and I'm a financial advisor here at Superannuation in Australia Today. Today I'm going to talk to you about life insurance and the importance of life insurance and having the right amount of cover. Life insurance is a policy on your life, so you can leave funds behind for your wife or your family or your kids, so that way they don't have to struggle if something does happen to you. You can get any amount of level of cover. They usually start at a minimum of $10,000. Why would you have life insurance? Well, life insurance can cover things like funeral expenses for yourself. It can also leave some money behind for your spouse to pay off, for example, the mortgage, or to pay off any debts that you may have. Life insurance can also help your family maintain their lifestyle when you leave. So if you're a dual income family and you rely on both your incomes to live the lifestyle you do, then how is your partner going to survive without your income? What you can do when you're factoring in your life insurance, how much you're going to acquire, you can work out how much your income is and how much you think you'd like to leave them each year until, for example, the kids are 18 or 21. So that way your wife or husband can spend quality time with your children instead of having to go straight back to work and put them in childcare or not be able to spend much time with them. Life insurance can be held inside or outside super. A lot of the time people hold it inside of super because then it doesn't affect your cash flow. It's best to speak to a financial advisor about how to structure that insurance though, so they can recommend whether it's best to have it inside or outside super, and also if there's other insurances that you should be considering. Life insurance premiums typically depend on what occupation you do. So if you're an office worker, it's going to be a lot cheaper than someone who works in a factory, for example, a trade worker. Also, it will depend on your age. So if you get it when you're 26, you'll have a lesser premium than if you got it at 36. However, it depends on what premium type you choose as well. If you choose step premiums, they will go up each year. If you choose level premiums, you pay a little bit more initially, but the premium doesn't change unless you choose to increase your cover with CPI, which is the Consumer Price Index, which is about 3%. Then you can actually select that, and then you'll pay the extra amount to cover the extra amount. But the level premiums tend to start a bit higher but continue at a small increase every year, whereas step premiums tend to be like a staircase. So as you get older, the stairs get bigger and bigger. So you just need to speak to someone about this and see what you can afford and where you can afford it and what's best for you. Typically, life insurance, you start with a lot when you're younger, when you're under about 40. And then as your wealth gets bigger and you pay off your mortgage and you have investments and things like that, then you can start to decrease your life insurance cover, which is why a lot of people go with step premiums. If you would like to know more about life insurance or other insurances, please see my other blogs. Alternatively, if you would like advice on life insurance or any other insurances, please feel free to give me a call.